What's up, YouTube? Hey, I wanted to tap in real quick. You guys know we got this holiday weekend coming up. So tomorrow the market will have a half day. On Tuesday, the market will be closed. So please make note of that. Hey, but do me a favor, guys. Please make sure you like and subscribe. Make sure this video get at least 1,000 likes, man. I appreciate it, okay? Check this out, guys. Question I got for you. Two, matter of fact. But number one, how bad do you want it? You have to ask yourself, how bad do you want it? And the wanted part is the part I want you guys to focus on, okay? How bad do you want to change your life? How bad do you want to change your circumstances? How bad do you want to change your condition? How bad do you want it is a question of the day, guys. Let me know down in the comments below what it is in your life that you want bad enough that you're willing to do whatever it takes to get that outcome that you desire, okay? Because oftentimes, guys, we have these things in our life that serves as barriers. We have these things in our life that serve as things that's keeping us in bondage to where it is and what it is we're either trying to go or what we're trying to achieve. And so on many levels, it's important, guys, for you to understand how bad do you want it will determine how bad you're willing to work, how hard you're willing to go for that desired goal. So think about that for me and then give it some thought and let me know down in the comments below. If it's, Chris, I want to pay off all of my debt. Chris, I want to buy my first house. I know how much ownership is important to you, and maybe like me, it's important to you guys. You might know and say, I want to own my first house. I want to own my first piece of land. How bad do you want it though? And are you willing to go through what it is you will have to go through to get it? That's number one, okay? Number two, and I might circle back to number one, but number two, guys, what do you do when stocks that you know, like, and love, or stocks that you want to invest in for the long haul are at or near all-time highs? Okay, we're going to unpack a little bit of that on today because I want to give you some guidance. I want to give you some things that you might consider, or I'll just share with you simply what I've done. Okay, I think it's important that you guys hear from somebody that actually has skin in the game, that actually has invested, has built their wealth, has retired young, has retired early, and is truly financially free. Okay, I own everything. I'm big on ownership. I'm big on you guys being the best version of yourself. I'm big on helping guys level up, and I'm definitely against anybody running in the victim Olympics. So how do you invest when stocks you know, like, and love are at their all-time highs? Guys, let's go ahead and unpack that. Okay, for me, I am a buy low investor. I am a buy and hold investor. Okay, so typically, guys, I try to approach the market. Okay, I try to make sure I'm putting my capital, I'm putting my hard-earned money to work so that my money is working for me. That's why when they sleep, we eat, and when they panic, we pounce. So for example, for me, I tell you guys religiously, I love to invest in VTI. Okay, that's my number one stock, the Vanguard Total Stock Market. Okay, VTI. All right. However, I enjoy buying it. I prefer to buy it when it is at or below $200. Okay, so what do you do when you have bought VTI at $200? You have bought VTI at $190, $180. Now all of a sudden, 15 months, 18 months removed from the downturn we had, now we're sitting up at 220, for example. Okay, for me, guys, I just let the money pile up at this level. My feet is up at this level. Okay, I'm not really accumulating the amount of shares I was under $200. Does that make sense? I'm not buying high. I did the work when it was at or below $200 so that I could see my money work for me and now go up 10, 15, 17, 20% to the upside. And that's on millions, by the way. Okay, think about that. All right, and so what do I do? What do I encourage? What would I suggest if someone was in that situation, guys, you have to be patient. There's no other way around it. You have to be patient at this point in time, understanding that, you know what, the stock that I'm looking to invest in long term is way out of reach, sitting at a new 52-week all-time high, for example. Okay, and so what you might want to do is you can still buy some. You can still buy a smaller portion than you normally would. So say on average, you guys might put in $1,000 a month. Okay, let's take that number for example. I would normally put in, this is hypothetical, okay, I would normally put in $1,000 a month into a stock that is at a 52-week high. Okay, however, because it's way out of range, meaning nowhere near your buy zone, it's at a 52-week high, you may only put in $100. Okay, instead of the whole $1,000, which does a couple things. One, you're buying high. Number two, you are raising your average cost. Okay. Number three, you are not demonstrating the level of patience. Right now, you should be managing things such as, how is the company doing? What does the balance sheet look like? This is if you're in individual stocks. How is the cash flow and the revenue for the companies that I'm investing in? You should be looking over things like that, okay? But then, guys, beyond that, you should be saying to yourself, okay, is this a 1 to 3 year hold for me? If it is, you may be okay deploying some money at the all-time high level if you have a long-term outlook. That is the key, though. You must have a long-term outlook if you are considering these things. All right, if you don't, if it's just a swing trade, if it's just a get money now type of ordeal, you guys got to acknowledge that, be real about that, and don't chase. Don't buy way up here at these levels. Apple, for example, one of my favorite stocks. I love to buy it at 140 and 120. Those are my two levels that you will see me always buy Apple at. 120 preferably. So if I got it at 120 and it's 190 now, I'm not touching Apple up here 190 when the likelihood of it continuing higher is slim to none. The risk to reward just doesn't make sense, okay? Yes, it may go to 200, okay? But at 200, we're definitely overextended, overbought at that level. When things turn back around, the stock may come back down. The stock may very well retrace back to 165, okay? It might come back to 140, okay? Might not come all the way down to 120, but that's why you have ranges in which you like to buy and accumulate in. And for me, that is 140 and that is 120. Sometimes, guys, it don't always come down to 120. That's why I'm dollar cost averaging at 140, 135, 131, 129. And then you ride it up for these type of moves that Apple ultimately and fortunately makes time and time again. As long as you're in the market, you will kind of see these things. But then they're going to have a period where they trade sideways and they're going to underperform. And you're going to see other stocks, other companies take the leadership. And then Apple will be your laggard. Still won't underperform like some other stocks may, but it won't be that dog leading the way. And so therefore, you might just fall back from that at the time. Just let your money sit in there and just continue to earn that dividend. And you know you're sitting in quality, okay? But these are the type of decisions and conversations you guys want to have with yourself as it relates to what do you do if stocks you know, like, and love are at their all-time high, okay? I don't chase, guys. I don't have the fear of missing out, which is otherwise known as FOMO. I'm either doing the work when the prices are low, or I just say, you know what, man, I missed the boat on that one. And stocks are like buses, guys. If you miss one, you catch the next one. But it still comes down to patience, okay? So those are the two things I wanted to kind of cover with you guys today. And I want you guys to give both of those ideas, both of those questions, some thoughts, and let me know down in the comments below. Next, I want to talk to you guys about two stocks that I'm looking at during this time, and mainly because, like I just alluded to a moment ago, stocks that I do truly care to buy more of are at or near their all-time high. So I told you guys I love to hedge against my portfolio. And one way I like to hedge is with the SQQQ, okay? And for me, when that is at 52-week lows, I do exactly what I'm preaching and teaching you guys to do when your favorite stocks you know, like, and love are at their lows. Okay, I like to buy, I like to accumulate. So one stock that I will continue to buy, okay, and I'll buy in small chunks. Okay, I'll buy in small chunks in anticipation that the market is going to keep going higher. So the SQQQ, for example, should kind of continue to go lower. Okay, and when I say lower, I'm talking about $17, I'm talking about $16, I'm talking about potentially even $15. Okay, so the SQQQ is one that I'll be adding to slowly with small lot sizes, building it out. Again, principles don't change. What do we always try to achieve? 125 shares is our first minimum goal. Okay, after you get your first 125 shares or something, then your next goal, okay, because it keeps you with a focus, it keeps you with a purpose in the market. And I'm always big on giving your money a purpose. And after you achieve the 125 shares, okay, then you are working towards accumulating 1,000 shares. Okay, and so that's where I would rather have the bulk of my 1,000 shares in SQQQ at, is when it's on the lower end of the range, not up here at 20 or 19, but 17, 16, 15. I like the majority of my buys to be at that level. Okay, the next stock I'm looking at, guys, right now is SoFi. Okay, more or less, it's a more of a high risk play, it's a growth play. It can go either way, but strategically, long term, I'm looking and I'm continuing to do my thing in SoFi. It's already a stock I have done my thing in. I have rinsed and repeated, and now this is another cycle I'm going back at it again with. Okay, that's the beauty about what you can do in the stock market. You can have a stock, make some money with it, sell it. You can let it come back down in price, rebuy it again, run it back up, sell it again. Okay, there's nothing against you doing that, and that's all I'm doing here with SoFi. Okay, and so at the $8 and below level, I want to accumulate as much of this as I can. Again, 125 shares is always the goal number one, just so you guys have a structured focus for your money. Okay, then as low as I can get it, I'll try to get my 1,000 shares, knowing that this has the potential to go to that $12, $14, ultimately $20 range. Okay, but check this out, some really quick technical stuff for you guys. We have heavy resistance at that $10 range, more like that $10.30 range. Okay, so understand, we got there, we got knocked back down, we got rejected. We got there, we got knocked back down. Okay, but check this out, the student loan forgiveness being ruled against or being denied by the Supreme Court, that is going to possibly provide some type of tailwind for SoFi. Okay, so ultimately that is positive news for a company like SoFi, which deals with finances, loans, and giving out loans to people, and you know what I'm saying, they're kind of like the banks. You think of it like that. Okay, all right, so that will bode well for them, which should, whenever it gets priced in or whenever it gets factored in, should be a reason maybe we clear that $10.30 level. However, guys, we still got earnings season coming around a corner, and you guys need to be mindful of how companies that you know, like, and love, how companies that you are investing in are going to report. Okay, because although we're riding high right now, a bad report, earnings recession, whatever the case may be, can be the thing that lets the wind out of the sails and maybe starts some retracement or some pullbacks or some correcting of some of these stocks that has ran so much year to date. Okay, so just be mindful that we got earnings seasons coming up, and depending on how companies report, we might go out and transition from a phase of euphoric movement in the market to, no, what are you really doing? What does your earnings say? Are you profitable? Are you getting close to profitability? If those things are not on the right track, guys, that could be something that temporarily stalls the momentum. However, depending on how you're looking at it, depending on your time horizon, that could also be a buying opportunity. Okay, so again, the stock market is a game for high level chess players, guys, and it's important that you make sure that you are approaching the game the correct way, not in a get rich quick fashion, not in a hasty fashion, but tempered, strategic, methodical, and patient. Okay, it takes discipline to master this game. It takes discipline to master these charts, but more importantly, it takes commitment and consistency, all things that are hallmarks of people that do well in other aspects of their life. So put it all together, guys. Make some stock market gumbo and watch the money pile up. The results will speak for themselves. You just got to keep showing up every day. Got to keep learning, keep earning, but more importantly, keep being willing to put in the work. Listen, guys, I wanted to put that on you. Hopefully this was helpful. We make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. So do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below. And I'll catch you guys in the next one. Peace.